In this video, we're going to be identifying our key levels on the higher time frame and identifying our key levels on the lower time frame. What's good, everyone? Welcome back to the channel, and if you're new, welcome. Like I said, we're going to be identifying key levels on the higher time frame and finding our key levels on the lower time frame. So let's jump straight into it. I want to break down quickly how price moves, okay? Just for some of you guys that may be new to trading, right? We know that price, if in an uptrend, will move in a push, exhaust, and a push phase, okay? And if we're trending down, we know that price moves in a push, exhaust, and a push phase, okay? Just a little tip for you guys, right? We want to be entering at the end of the exhaust phase, okay, like so, because what this does is this eliminates drawdown and increases probabilities of taking profits and winning our trades, okay? And this is where we can be finding our key levels, right? Our key levels when in a trending market are usually going to be, in a downtrend, it is usually going to be the lower high, and in an uptrend is usually going to be the higher low, okay? These can be our key levels, but of course, key levels are everywhere and we've got to spot the major ones. So let's jump into EU and have a look at the hour time frame and spot out our key levels. Right, so we can see that EU had been trending down, okay? We can see that price was pushing, exhausting, pushing, exhausting, and pushing, and we had then entered a ranging market, okay? So what we can do is we can mark out our key levels here. We can see that price is failing to break above this area in the market and failing to break below this area here. So this can be our first two major key resistance and key supports. And remembering that key levels are just an area in the market. It's not a specific number. It's just an area in the market where price is respecting or bouncing from, okay? So we can spot our first key levels through here because these are the lower highs and these are also the lower lows where price is failing to break, okay? So how have we identified this? It's because we can see the market structure. We can see that price was pushing down, creating lower highs and lower lows, okay? But we're seeing that price is failing to break them. A key level is going to be where price is failing to break or rejecting from. So we can clearly see here that price is rejecting this area. We want to make sure that we see price either respect the key level 3 to 2 times minimum to tell us that this is a strong level in the market, okay? So like we can see here in the example, price was pushing down, came up, failed to break twice here, came back down again, and failed to break for the third time, right? And also failing to break below here. So what we can do is we can wait to see a break of either the resistance or the support, okay? And in this example, it was the support. So understanding how key levels work and how the market moves, right, is price is drawn to these key levels, okay? You don't want to be trading randomly from anywhere in the charts. You want to make sure you're spotting your key levels and trading from them, okay? So like this example here, we can see that price was ranging, failing to break above this support and resistance area. We then see a break, okay? We then have to be patient and either wait for price to come back to the level because it was a recent key level here, as we can see our wick rejections and we can see price respecting the area, okay? Telling us this is the key level in the market. So once we identify the break, we're either waiting for the retest, or in this example, we can see that price is broken through, okay? And like I said, price is almost drawn to the key areas like a magnet, okay? Because we see the break, we then have to wait for the exhaust. So we can see that price was then pushing, broke the key level, and then we see our exhaust. And like I said in the beginning, the exhaust is usually the area of the key level because price is trying to come back to it and then looking to load up and then continue. So like we can see here, we can see that price broke the level. We didn't respect it, okay? If we were going to continue down, what we'd want to see is we'd want to see price just simply respecting this key level, giving us wick rejections, telling us that price doesn't want to continue any further. But we see a break and then we see the exhaust back to this key area. Remember, it doesn't exactly have to come down and touch the level. It just needs to come to the area, okay? So we can identify, knowing how structure moves, that we see a push, exhaust, and a push, okay? And where will our next key level be? It will be the key level we recently had drawn, okay? So we see that price pushed up, bounced off the recent key level we had here, came back down to the recent support key level, and then continued up, okay? So this is how markets are moving, right? We identified the key level because we can see that price is respecting it. More often than not, price will always come back to these key levels, so you want to be identifying them and trading from them, okay? So let's jump into the 50-minute time frame and try to identify some lower time frame key levels. Okay, so with the lower time frames, things just stay the same, okay? Structure is structure no matter what the time frame. Price will always move in a push and exhaust phase, whether it be the higher time frames or the lower time frames. So spotting the key levels on the 50-minute time frame is almost just the same as the higher time frames. We just want to see price rejecting the area and respecting it, okay? So we can see that we had been trending down, right? We can see that price has pushed, exhaust, and we've then entered some sort of range. What we're doing to spot our key levels, all we're simply doing is finding the area where market seems to be rejecting from and giving us wick rejections. Wick rejections is simply where price has failed to go and then retraced back, right? So here we can identify a key level. Why? Because we can see that price is just failing to break above it, right? We see our wick rejections. Price has tried to push above, but it's just failed. So this is going to be the same for whatever pair, whatever time frame you are trading. You just want to find the area where price is failing to break most recently, okay? So in this example, we can see that price was failing to break above this level here. But we can also identify that price was failing to break below here as well. So this is going to be another key level for us. Why? Because we can see that price is failing and that we can see multiple wick rejections in the area. And again, you've got to remember that you want to see price reject from the area more than 2 to 3 times to tell us that this is a strong key level, okay? So we have our key levels set, okay, and market was just ranging. In this example, we're bearish, okay? So we can see that price has finally broke. But what can we identify? We can identify that price was exhausting, it was pushing, and then we see our exhaust phase into the key level, okay? This doesn't happen all the time, but usually more than not, exhaustion phase will be the key level, or the exhaustion phase will be the market coming back to the key level to then pick people up and then continue. So for this example, we can clearly see that price was ranging, we broke, and then we see our push, and then we see our exhaust, okay? So we know this is a key level again because prices came back to it, right? We see multiple wick rejections in the area. How do we take advantage of this? Simply look for the wick rejections, trade with the trend, of course, and identify that price is failing to break the level. We could then look for a sell, right? So the next key level I could be drawing in here is we could simply be seeing that price was failing to break below here and failing to break above, okay? So the next thing we can do is just simply look for price to either break above, come back, retest, continue to some of these key levels here, because the price is drawn to these key levels, okay? You want to make sure you're not trading in the middle of nowhere. Or if we're looking for a continuation to the sell, we'd want to see a break, retest, and then a continue, okay? I hope this video cleared it up for you guys. I hope you can get an understanding of how we can identify key levels on the higher time frame and on the lower time frame. Just remember, identifying key levels is just the same. You want to see rejections in the area. You want to see price respecting the area more than twice or more than 3 times. And you want to see simply the wick rejections, okay? Hope you guys enjoyed this video. I hope it helped out. And if you liked it, leave a thumbs up and I'll see you in the next one.